Now, for our next session, will bring us the promising fintech landscape of Africa. And we were there with Elevandi in June at the Inclusive FinTech Forum. And I have to say, for a lot of you, FinTech has a really, really rich taxonomy. It's everything. It's retail, it's wealth management, it's capital markets, it's insurance. And from a product perspective, you're looking at accounts, you're looking at investments, insurance again, payment and lending. So there's quite a lot to do. So before we delve into it, here's a short video to give you a glimpse of what that looks like. Wasn't that exciting? So, come 2024, Elevandi is going to partner with the Bank of Ghana and Development and the Development Bank of Ghana for the 3i Africa Summit. So stay tuned for that. We have more details to come, and if you'd like to join, we'll be sharing them. But for now, Africa's financial service revenue, 230 billion by 2025. And how are fintechs riding this wave? We have Patel, heading Elevandi, so our own Pat Patel, who will be moderating this panel. Over to you guys. Woo!
Hello, everyone. Thank you for joining us today. This is going to be a very insightful and fascinating session. I hope you've got your notepads ready. There's going to be a lot of sound bites and facts that we're going to share. I'm very privileged and honored to be joined here today by Dr. Maxwell, Deputy Governor of the Bank of Ghana, on my far right-hand side. And also, we have Kay Duka, the CEO of the Development Bank of Ghana. So put your hands together and welcome them to the stage. So, there's a lot to talk about. Africa, it's a lot to chew, actually. There is lots of nuances, lots of developments going on. And there was a stat mentioned earlier. And this is a piece of research that has come from QED Investors and the Boston Consulting Group, where they conducted a study around growth rates or growth multiples and fintech revenues by 2030. And I'm just going to read these out because they're quite mind-blowing. So you have LATAM is predicted to grow at 125 billion at 12.5x. Europe is 190 billion, growing at 5.5x. North America is 520 billion, growing at 4x. So you can start to see a slowdown in growth here. APAC, which, surprise, surprise, is going to be the largest fintech revenue market by 2030, is 600 billion, growing at 8.5x. But where we have, which is really interesting here, is Africa as the fastest growth rate of 13x, which will take it to 65 billion. And this is just going to continue and continue over the following decades. And so one thing I wanted to kind of just pick up on this is, there's a great deal of headroom for growth, as we're going to see over the next 7 years. And I want to ask this first question to Dr. Maxwell. What needs to happen to achieve this growth rate between now and 2030? What are some of the things that you're seeing?
Thank you very much, and good afternoon to all of us. I think you pointed it out rightly. Africa is really the nerve center of growth of fintechs globally. And this was because of the youthful population we have in Africa, and also the fact that there was this real hunger for payments and for digital services, because Africa was behind in terms of the card system. And so when Kenya started with the mobile money payments, it opened up the potential that you can see in Africa. And we saw all that opening up the entire payments and digitization drive in Africa. What needs to happen for us to take advantage of the growth is to make the environment conducive for FinTechs to be able to grow. And that, I will speak from the point of a regulator, is really the issue about regulation. And it's really about proportionality in regulation. How do we ensure that the degree of proportionality that we enforce in regulation makes it conducive for FinTechs to be able to set up and to be able to grow? And that calls for us regulators striking a good balance between promoting inclusion and also ensuring financial stability. It's always a difficult one to do, but once we get that right, we have the fertile grounds for FinTechs to grow in Africa.
I think there's a couple of things there that I want to kind of dig into. There's the desire, I think. It's a desire to grow the community. And so what's required to scale FinTech businesses in multiple markets in Africa?
I mean, to scale the FinTech businesses in multiple markets in Africa is really, I would take it from the point of a payment system architecture and the degree of and the interoperability to enhance cross-border. Because you can start up in a place like Ghana, and you should be able to move to other parts of Africa. And for you to be able to do that, that means your systems, your logistics, your infrastructure, and both the hard and the soft should be interoperable to allow you for easy access to be able to move to the other parts of Africa to set up. So for me, I see that as the key binding constraint to be able to have interoperability both in the hard and the soft infrastructure, and also harmonization of regulations across the continent. Because if you face a different type of regulation requirement in, let's say, Ghana or Nigeria, and you want to move to Kenya, and you have to go through a very different kind of regulation requirement there, that affects FinTechs especially to be able to move across and to be able to scale up. And so that's from the point of view of regulator, we need to look at in terms of harmonizing our regulation and also ensuring interoperability of our systems.
Got you. And so there is a strong need to bring regulators together and to start a line. I think when I look at the experience from Europe, it's taken a long time. We've had a number of kind of regulations or self-regulations. So we've had the SEPA, we've had the Payment Services Directive as well. We've had various kind of forms of self-regulation around open banking. But all of these things have slowly helped for businesses to scale and passport themselves into different jurisdictions. But it took a long, long time, and it took a lot of dialogues as well. But we can come back to that, I think, because that's a really important part. And so, Kate, over to you now. You know, from your development bank perspective, and you know, you have a tough job on your hands. And so, when you start to think about across the region, what are you seeing to kind of drive that growth? Because you're kind of heavily centered around investment, you're centered around growing startups and supporting the businesses. But how do you see Africa achieving that 13x growth that the Boston Consulting Group and QED investors have been talking about?
Well, I think, you know, we're all in violent agreement about the opportunity at the moment in Africa. And I'm you know, it's actually looking at the stats today that a lot is happening already. And you spoke about the growth. I mean, FinTech is the fastest growing vertical at the moment in Africa, in the world. Something about 20% at the moment. The about 678 FinTechs were started up last year. So you see all this, you know, all this happening already. And it's really makes my job easier, especially when you have a regulator that's also heavily focused on building innovation and digital assets. And so when you get that combination, that collaboration of development banking with the regulation coming together to support the private sector, then you really have, you know, something quite unique. And I think it's that partnership, that collaboration that we're beginning to see clearly in Ghana, but we're beginning to see in the rest of Africa, that's really going to take this to, you know, triple X in terms of returns. Yeah. Thank you.
Yeah, that's great to hear. And I think, the governor mentioned scaling and mentioned around harmonization of regulation. But what would you say are some of the big challenges that we kind of need to overcome to be able to get some of these great growth rates and attract more interest in the marketplace?
I mean, the challenges are there. And the challenges, I would say, that probably are both at the same time the opportunity. So the first challenge, as always, is governance and making sure we have the right governance structure, the stability, etc. And you're beginning to see that come in over time in certain countries, and that's growing throughout. And it's important that this infrastructure that we build, the foundation that we have, supported by the regulator, is very much on making sure that we have the right guidelines, the right governance. And the G in ESG is key to how we built our development bank. The second area is, again, the infrastructure. And that's also created an opportunity. So while Africa lags behind in terms of legacy, infrastructure, and all that, that has also given us the opportunity to build with a lot of the new technology that you see already. So when you talk about outages, for example, with core banking systems in the West, et cetera, many of whom are my friends here, you don't really get that at the moment in many African countries because we don't have those legacy systems in that respect. And it's about building and leapfrogging the traditional infrastructure and moving swiftly towards digital assets. The third challenge has always been our demography. Most of Africa, as Dr. Maxwell said, very young generation. In Ghana, I think the average age is about 25. I think in Mali, it's 15. Right? And while that creates a need and a thirst for jobs at a really accelerated rate, it also gives us the opportunity because these are the guys who are early adopters of technology. And that's why we see that growth in the vertical in FinTech. Final area that we really need to work on, as he said, is resilience. It's not so much that Africa contributes a lot in terms of the climate issues, et cetera, but we don't have that resilience yet. We don't have that resilience to be able to withstand shocks and changes in either climate, et cetera. And so these are the things that we all need to work together on. And these are the things that together, both private and public, are beginning to make an impact in terms of making sure that we become more resilient in terms of infrastructure.
And just to kind of segue slightly, and we're going to come on to Ghana in a little bit more detail, but we've talked about what's required from the fintech space. But Governor, what about the banking industry? What more can we do? Because when I look across Europe and I look across Asia, there's been a big drive to get the banks to be more innovative, to start championing solutions, but also work together. So if you look at, say, a number of the projects that we're seeing in Singapore, you look at some of the projects in the UK, you see kind of banks coming together to either build utilities, but start to kind of innovate together at the base layer. And then on top of that, you can then differentiate yourselves with different products and services, whether it's payments, whether it's different account provision. But what more can we expect from the banks, and should we expect from the banks to be doing more to drive some of this?
No, thank you very much. I think maybe I should put it this way: the banks have no option than to drive solutions. Otherwise, they are facing an existential threat, and we see that happening. We see the banks more or less trying to compete to be able to drive solutions. But I would want to see it more coming from the point of partnership with the FinTechs. And even though we're going to come into Ghana very soon, this is how we started it in Ghana. In Ghana, the FinTechs up until 2019 were not being regulated and they were not being licensed. So the only way they could get products out there was for them to partner banks. And that already set up an initial framework where we started seeing a lot of partnership between FinTechs and banks. And so through that, you started seeing the banks beginning to innovate and beginning to come up with solutions. And then when we came with the new Payment Systems Act, that then allowed the central bank to license and to also regulate FinTechs. That act stopped at allowing FinTechs to play the role of banks in the sense that they couldn't accept deposits and give out credit. So in that space, for them to be able to operate in that space also required that they partner banks. So we've seen a lot more FinTech banks coming up with solutions to be able to solve the payment problems that we see. And we are beginning to see banks creating their own wallet. In Ghana, beyond the FinTechs having a wallet, the banks have come together to create their own wallet because they realize that if they don't, they're going to be left behind.
Yeah, agreed. You start to lose the touch point with the customer. And so, you know, when I think back, and I keep going back to Europe, but it took a number of years to get a lot of the banks to start collaborating with FinTechs. And now you're seeing more of these partnerships happen, which is great to see, but it's taken quite a few years. And so let's zone in on Ghana. And, you know, one thing I wanted to kind of understand more is, you know, that journey that you see around innovation specifically for Ghana, and you know what are you currently working on in particular, Kay, and how is that looking over the coming at least 12 months as a roadmap for UK?
Okay. I think Dr. Maxwell, you know, really set the tone in terms of the creating that enabling environment to be able to drive. And it may sound strange coming from a development bank, but my mantra is always follow the money. And it's important because we need to build sustainable prosperity. And sustainable prosperity doesn't come from handouts. Sustainable prosperity doesn't come from, you know, grants, etc. It means by building a thriving business. So one of the key areas that we're working on in terms of a development bank is that we're building probably the largest data warehouse. Because our superpower as a national development bank is the fact that we're a convener, and we're a super convener. So the banks provide data to us because we provide wholesale liquidity. The SMEs provide data to us because they want loans. And government provides data to us because at the end of the day, we're a national development bank. And putting all that together is allowing us to build a data warehouse, data liquidity, that then allows us to then be able to push and look at the analytics and be able to make decisions in terms of how to allocate resources for us, how to allocate resources for the private sector, how to support the budget process on a national basis, and at the same time then takes us into AI and how we take all that forward. And once we have all that data, we then begin to be able to make real decisions. And that's a key part of what we're building at the moment. What does that also do? It allows us to have an ecosystem where everybody speaks the same language. And so one of the biggest issues that we have, and it's throughout Africa, is that banks complain about SMEs, even though SMEs are the engine of most economies. In Ghana, it's 85% of our economy is driven by SMEs. SMEs complain about all the documentation that are required from banks, the lack of loans, etc. But creating that database, creating that engine and that platform, which we started working together through Proxtera, some of you might have seen the Proxtera booth, supported by the MAS and the central bank. We're beginning to get banks and SMEs to speak the same language. And once you can get them speaking the same language, then we can drive together for mutual prosperity. And that's a key initiative that we're working on at the moment. Thank you.
Wow, that's a beautiful way to put it, as a superpower as well. I like that. So let's kind of now delve a little bit into 3i. So we saw this beautiful video that was played before our session started. And, you know, we're super grateful to be working with you on this as well. But maybe, Governor, you could share what you see in store for 3i Africa and what some of the reasons are. And I think we've touched upon quite a few of these, but maybe you could kind of bring that to life, and then afterwards we can ask Kay from his hat on what he sees as the way forward with 3i Africa.
Thank you very much. I think we've touched on some of these issues in our discussions, but as I said earlier on, there has been a lot of success in terms of digitization and fintech in Africa. So that's one. Two, we've seen a lot of potential that we have in Africa as you started with the research, and that potential is huge. And three, we've also seen regulation being aligned to make it more conducive for startups and for fintechs to operate in Africa. So when you bring these three elements together, it creates a big opportunity for investors, for fintechs, and for governments to showcase this. So 3I, which is investment, innovation, and impact. How we're going to innovate, how we're going to bring in investment, and the two together, how that is going to impact our economies, is what we call the 3I. Bringing them together and showcasing the opportunities available and allowing people to see the investment opportunities, the success story in Africa, and areas that they can invest to be able to make an impact in our economies is what we expect to see come next year, May 2024.
That's great to hear, and I really can't wait. We've got Matthias here as well, and he's going to be supporting in a big way. So when I think about it, and when I speak to Sopnendu, we attend, sadly, many fintech events around the world, and there are so many of these around. And when I speak to Sopnendu about this, he is very bullish about what's going to happen next year, and he's starting to quote numbers of 3,000 people coming along. He's quoting numbers of senior leaders from different jurisdictions coming, investors from the US and from Europe as well. And so I just want to hear from your perspective, how, Kay, are we going to live up to Sopnendu's expectations on this as well? Because he dreams big. This was basically 5,000, it was about 11,000 people in year one, now it's 60,000 people. And so that mentality of start small and dream big gets you to where you want to be. And I know, Kay, that you have a serious meeting of the minds with Sopnendu, so maybe you could share some of this journey, because you guys go, you've been friends for a long time now, and so maybe you can share how that translates into a kick-ass event that we're going to deliver next year.
Yeah, thank you. SOP sets pretty high hurdles, but equally, I would say, so does my governor on my right. So we know we have the high expectations, and a lot of that basically is based on the work that's already been done in terms of the policy and regulatory development, and I think that's key. It's about the plumbing. It's about making sure the foundations are there to really set that up, and really have as you say, a kick-ass event. And the regulator has done a fantastic job, in that respect. And it's not an accident that the ACFA, the Africa Free Trade Agreement, the secretariat is based in Ghana, and because it's a testament to the regulatory environment that they've built over time. But again, as we take this thing forward, again, it's back to following the money, and you can really see the opportunity, the prize is there. And you look at just the West African region, you're seeing 325 million consumers. Again, all between 15 and 25, the majority of them who are looking to consume, who are looking to invest, and who are looking to contribute. And so that opportunity, that prize, is something that we should all be sharing in at the moment, and we should take advantage of the 3I conference to be able to really drive that and take it forward. Thank you.
Yeah, no, I completely agree. And, we at Team Elevandi, we've been skilling up. We've been bringing the right people in as well. We have Matthias here. For those, please, Matthias, stand up, please. So for those that don't know this man, he is the godfather of challenger banks, the founder of Fidor Bank, way before FinTech was an actual thing. Matthias is going to be leading the charge from the Elevandi side as the CEO and managing partner, is that right, for Europe, Middle East, and Africa. And so with him at the helm, I have no doubt this is going to be a massive success. There's a lot of weight on his shoulders, but to be honest, this is nothing. You set up a bank in the middle of a financial crisis, 2 banks, and one in the middle of the financial crisis. So this is nothing. So yeah, I just want to kind of conclude a little bit on, we're running out of time actually, so there's no need for a conclusion. I was going to see if there's any questions from the audience. We're going to be around outside here if anyone wants to catch us afterwards. But if there's any immediate questions, please raise your hands. If not, come and catch us outside. It's a tough crowd. Cool. Oh, we have a question.
Hi, my name is Amit. I'm the Center Director at the NTU SPF Center for African Studies here in Singapore. My question is, when it comes to financial services, does the panel here have some kind of data on the number of jobs that have been directly created in Africa in general, and maybe Ghana in specific, if you have any? And a corollary to that is, in your opinion, do you need a stronger manufacturing base sector to drive the growth in financial services, or is it, in your opinion, the other way around, which would work better for Africa? Just your opinion on that.
Who wants to take that question first?
I'm not sure I have, for both Africa and Ghana, the number on top of my head in terms of the jobs but it's enormous. Let me give you one statistic. In terms of transactions alone, from just the FinTechs, in 2020, we had 2.5 billion transactions. In 2023, we have 1.2 trillion transactions. So just within 1 year, that alone should give you a sense of the growth and the potential that we have in that sector in Ghana alone, just within 1 year, from 2.5 billion to 1.2 trillion transactions taking place. So that gives you a sense of the growth and the jobs that is creating. But when it comes to the financial services driving manufacturing, what we saw is the other way around now, because we realized that the financial services rather drove the services sector of the economy. And now the servicing sector is now spilling back to prop up the manufacturing sector and to let the manufacturing sector grow. And we are beginning to see that in our national accounts data in Ghana. And that is replicative for the rest of Africa.
So if there's further to that question, we can take that offline. I can see everyone agitating and we need to go. But just to say that what we're building in Ghana is not an event. It's way more than an event. As we've seen with the Singapore FinTech Festival, there is a purpose behind this. It's about bringing the communities together to drive change, and that's what we're going to be delivering collaboratively in Ghana next May. So please join us if you can. We would love to host you in the beautiful city of Accra. Thank you.